Hello traders, welcome to today's live stream. It is Thursday the 16th of January. We're going to be going over some key events of the market so far. We've had some really important data that has come out today already. We had some retail sales data, so we're going to take a look at the market's reaction to this today and probably going to go over just a few charts of interest as per usual. Been a few changes to the markets. There's been some nice moves on the precious metals. Silver continued to gain to the upside. So was buying silver last week, came out of that position, didn't manage to get a re-entry. Unfortunately, that market has continued to move to the upside, but we're going to talk a little bit about this in a little bit more depth as well. Let me just do a little bit of editing there. Let me just move myself a little bit. So, yes, hello Ratish, how are you doing? How are you doing? Hope you've had a good trading week. Afternoon, Irfan. You're on time today, nice, I like it, Well, welcome to everybody. If you are watching and you haven't said hello before, give me a wave, say hello, I don't bite. My name is Jonathan Kibbler. I'm Senior Market Analyst at 𝖢𝖥𝖣yi. I'm going to take you through some of the markets and what's been going on. So let's just dive into the data quickly. Obviously, I saw you on Tuesday, so there's been a few events that have come out since then. The market has turned slightly. Afternoon to you, right, guy. Hope you're doing well. Few pieces of data which I thought was quite interesting that came out and saw significant moves. So first of all, in the morning we had CPI in the UK. We saw it fall to 2.5%, which is quite interesting to see. So inflation data in the UK coming in a little bit lower, which is I guess good in that sense. Bank of England have held rates higher. You want to see this lower though. We want to see this towards sort of 2%. Still up in that 2.5% range. We were at 1.7% in October, and since then it's kind of been on a little bit more of an incline more than anything. But CPI in the UK coming in a bit lower, same as the US. So this was the data that really started to kickstart a bit of a market move in terms of risk assets. So you can see that we actually came in on core CPI down at 0.2%, forecasts were 0.3%. So core coming in a little bit lower than anticipated, which was good. The markets took that as a good thing because we've seen a lot of markets pricing in rate holds by central banks, or at least the Federal Reserve. So seeing this inflation data drop as it did has kind of comforted some of the markets, and we've seen some interesting moves, which I'll show you just behind us here. And then today we had some interesting data as well. We had core retail sales out of the US coming in at 0.4%. Now the US Open is in half an hour or 25 minutes or so, so we'll see how the market does kind of digest this information. Unemployment claims did rise to 217,000, but obviously the unemployment rate recently has come in a lot lower. But yeah, retail sales coming in at 0.4%. Forecast was to come in at 0.5%. So some growth here from 0.2% previously, but missing out on those expectations. So yeah, market's taken this quite well, I would say. If we look at the sort of volatility index right now, so what we've got here is the bottom candlestick chart is the volatility index, and the pink chart there, or the pink line there, is the S&P 500, because I like to look at the comparison between the two, because you know the volatility of the S&P 500 index and the S&P 500, you can see how they kind of marry up. Now, one thing we were talking about earlier in the week was the fact that prices had been kind of climbing here. But we talked about if we do start to see the VIX pushing lower, then that could incite a little bit of buying into the stock markets. And that's what I've been looking for this week. And we finally started to see that. So price was kind of trading below these lows here. We then had the US CPI data yesterday, and that pushed prices back to the upside. So if I turn this back into a candlestick chart up here, if I can anyway, let's see if I can change that price line style, candles. Okay, so if we look at this from a candlestick chart point of view, you know, we were trading at these kind of lows here. We then had yesterday's data, okay, that's CPI data, which pushed prices back to the upside, and we had a very strong bullish daily close on the S&P 500, as well as most US stocks. And if you kind of compare where we started to have that downside with the volatility index, it compares with this bullishness from the S&P 500. So if we do see a continuation of the VIX to the downside, then the S&P 500 is going to continue to the upside. We've broken through the 20, I think that's the 20 moving average. It might be the 50 moving average actually. Let me just double check that. So yeah, the 50 moving average, we've broken through that 50 moving average. Typically when the volatility index is below the 50 moving average, prices can be pretty bullish. You know, we broke through the 50 here previously, market was bullish, and we stayed below it until this pop in here. Then we were back below it here, market was bullish, popped back above it, and ever since the market's been a little bit more on the bearish side of things, but now we're below. So all in all, long story short, I like stock markets to the upside as long as the volatility index can kind of remain below that 50 moving average. So that's what I'm keeping my eyes on at this current moment in time, is the volatility index, wanting to see this continue to kind of drive down. That will bring sort of risk on assets into play. So I actually had a Bitcoin long this week. It was one of my only trades of the week was a Bitcoin long. And the reason why I like the idea of being long is because I saw the volatility index shift and I missed the S&P move. So I thought, where can I go and take advantage of this? And I saw that the Bitcoin price was breaking out of this trend line resistance here, breaking above this 50 MA. So I ended up buying on this dip in here, and then the market rallied up. So I'm out of this trade now. Don't like to hold these type of moves for too long because Bitcoin is a very volatile asset. So, you know, I like the idea of price kind of holding down at this kind of 9150 area, 92k area, and then potentially retesting the 100k, which is what it ended up doing here. We ended up retesting that $100,000 sort of dollar, which is a huge psychological barrier for Bitcoin at the moment. So that was kind of one of my only trades of the week. Something that didn't surprise me too much was the fact that silver came back and rallied. I was hoping to get back in on a move here, but what I was really looking for was some kind of that kind of play there, some kind of cleaner reversal situation. Didn't quite get the situation I wanted. I almost wanted for another lower high to be formed, maybe a bit more downside, maybe some kind of double bottom pattern to be formed here before getting back on this silver train. But price is broken. So I do like silver to the upside. I'm going to continue to keep my eye on silver to the upside, but I need to wait now. I need to see price kind of develop a bit further, maybe get another pullback, and then I can start buying back into silver again. So yeah, unfortunately for me, I haven't managed to get back on this. But this also kind of fueled a little gold move as well. Let's take a look at gold. Gold we like to the upside as well. This was the kind of area I wanted to be bullish on. Did I buy it? No. So just completely fumbled the trades this week in terms of what I was looking at and what I was watching. I've been looking at a Euro CAD trade short and a pound dollar trade short, but I just haven't managed to kind of implement anything there. But you can see here, what did gold do? Well, it was in that daily pullback phase. It created a lower high. Didn't quite get the lower low, which is that nice double bottom pattern. It broke that. That would have been an ideal long for me on gold back up into this resistance level. So yeah, the data that we've seen at the moment is starting to kind of push in our way a little bit, but I just need to see I just need to action some trades at the moment. So you can see here it was kind of like a support, resistance. You know, is this zone again going to be a sticking point for gold prices? If it is, that's fine. I mean, I actually wouldn't mind if we get like another sort of down day like this, maybe even like a couple of down days in here, just like a very slow couple of down days, because I think if we hold this resistance but don't really see much follow through on the downside, I actually expect a breakout, and I expect gold to kind of push back towards all-time highs again. So I'm keeping my eye on gold right now. I think this is a market that, along with silver, I think silver's better if we go look at the gold-silver ratio in terms of value. You know, I think gold-silver ratio is quite high right now. So I think if you are a trader looking to get into the precious metals of either gold or silver, I feel like silver's the better placed market to look at for opportunity. Yeah, interesting watching silver as well. Last hourly candle looks good. Let's have a look at it. Yeah, I mean, that looks like a you know, what is that? That's a classic sort of reversal kind of pattern there, isn't it? You have a very strong bearish close, no sellers beyond that point, all those sellers out at that point, buyers have taken out. Almost looks like trapped sellers there, doesn't it? In that sense. But I'm not really trading the hourly time frame just now. It's still quite early in the year, so I'm kind of taking higher time frame stuff. Right, I don't worry about missing gold. I think it's better to miss a winning trade than to take a losing trade. Absolutely. I don't really get the sort of FOMO-y push anymore. But what I will do is kind of review the markets that I am watching to see if there was something I could have done better. So I think for me, just on a goal point of view, it was something that we discussed. Obviously, it's something that I wanted to do. The one thing that I let myself down on in terms of execution is I didn't have any alerts set up, which is something I typically do. I'll set up a load of alerts and wait for the alert to be triggered in order to kind of get into a move there. So really speaking, I should have set some kind of alert here. And, you know, I'm usually searching through the markets at 10 p.m. UK time, because that's when the market closes for me. So I usually am at my screens at 10 going through my Forex heat map. So probably should have just had a quick flick onto gold there, but it was just an error from my point of view, just not keeping up with the market there. Like I said, I've been looking at some other currencies. I can see that Ratish has been doing well. I had a couple of great trades, short pound yen, CAD yen. Yeah, one market that I liked in particular was Swiss yen. So this is a market I actually was able to execute on. This is the current trade that I'm in right now. But Swiss yen was the one that I was really looking for. You know, Tuesday we had this nice bullish close, and it was on the currency strength meter to have a little look at a possible move on this. So yeah, I might have missed the gold move, but you know, I did get a couple of trades. I can't say that I didn't. You know, Bitcoin being one of them and Swiss yen being the other. But yeah, Swiss yen was on the Forex heat map, and most of those yen pairs. So Ratish is right. Sort of pound yen in particular was a market that I also liked the look of. For some further downside. So yeah, I like the idea of buying yen at the moment. I think for me, this is a market that is kind of coasting under the radar a little bit when it comes to opportunity. I think Japanese yen is definitely a market I am very interested in. Now, Swiss has been a currency that's been getting weaker, and you look at the price action here. This is you know, bread and butter stuff for me. Market is starting to trend to the downside. We have lower lows and lower highs on the daily chart. We start seeing that secondary phase. This is my alert, right? When I start seeing a secondary phase, I'm alerted to the market. Yes, I like it when we start pushing into the phase one of the move, or you know, the primary phase where we have the longer leg, which is what we're in now. But the secondary phase is my alert, right? Because I'm looking at that going, okay, well, I'm looking for the turning point of the secondary phase into the primary phase, right? So just as an example, this move in here previously, I try and look for similarities between those types of levels. So if I just take a little arrow and just pop a little arrow on here, then, you know, for me, that level there, if I now go to a 4-hour chart, right, what is price doing? Well, price is making a new high. Okay, this was the low at that point, but then it makes a lower high, it makes a lower low. So this would have been a nice area for me to try and execute some positions on a 4-hour basis. If you go to the hourly chart, you'll get an even better insight, right? Because what happens on that daily, so this is the daily secondary phase in here, right? So I'll just put an S next to that, right? And you can see that on a bearish trend in the secondary phase, the daily chart is pulling back and it just looks like a couple of daily bullish candlesticks. But on an hourly chart, it's a bullish trend. The market is making higher highs and higher lows. Where does that change? Well, it changes here. You get the nice little lower high pattern. Market makes a lower low. So anywhere around here from an hourly perspective would have been a good area to look for that sort of downside play on Swiss yen. Take that into what's just happened here. Why did I get into this move? Very similar. Hourly chart is trending to the downside. It then starts trending higher. I popped a little counter trend line support line on here. Looked for the breakout. Looked for the break below the 50 moving average. Bread and butter trade for me. Entered a short position. Stop losses above the highs. Market moved to the downside. Coming very close to targets. Target is 170. Pretty much around that little area there. It does overextend here on TradingView, but mine on my platform is 70 spot 10 because I want to come out before the 170 handle there. So just under a 2.5 reward to risk ratio there, and I am managing this on a 4-hour chart because that's where I ultimately took the trade. I took it on this 4-hour break here. So I'm waiting for a lower high to form, and once a lower high is formed, then I'm going to move my stop loss down and protect some capital there. But yeah, Swiss yen has been a nice move. Pound yen also, you know, was a nice move. I didn't actually trade this one. I actually set this up before coming on the live stream just to kind of show you guys that we did, you know, talk about a pound yen short position. You know, I actually wanted to see it pull back a little bit more. But my alert did go off for pound yen, but I wanted to see another sort of leg higher before seeing this downside play. Whereas, you know, the difference between this and Swiss yen is the fact that Swiss yen came back into an area where, you know, I was comfortable with putting the risk on here because we were back at resistance. Looking at pound yen, we were a little bit away from that. So I was just a little bit more cautious. And the fact that there was some, I'd say, positive pound data kind of put me off a little bit. But this is the exact same thing, right? When you look at the daily chart, what has the daily chart been doing? You know, I like pound yen down to potentially 186. I think this is a good market to target for further downside. Ratish, I can see you said do you still see more upside in yen? I do. There's a couple of reasons why. First reason is the Bank of Japan Governor Ueda come out and said that they will hike rates if conditions continue. Conditions are likely to continue. They've increased wages in Japan. They've done lots of they're kind of coming out of that deflationary pressure. There's inflation that's coming in, so I think the Bank of Japan are going to do something. I just don't know whether they're going to do it yet, because I don't think they'll do it ahead of Donald Trump's inauguration on the 20th. So I don't think they'll do it until then. That being said, when I come and take a look at Japanese bond yields, this is something that, you know, we've talked about in depth a couple of times. When you take a look at Japanese 10-year, right, and you just put it onto a weekly chart here. Now, the Bank of Japan removed the ceiling for yields, which used to be at 0.5%. So when yields came up into 0.5%, you would see this kind of yen strength coming in because there was a cap at this point. What then happened is they removed that cap. okay, and they said that they'll allow it to float up towards 1%. We got near 1%. We saw yen strength coming in. Again, back in July of this year, yen strength came in. This was the intervention, right? That was actually intervention here, intervention here. They've now let it float further, and my kind of feeling that they've done with this is because of the fact that Trump is coming in, and they don't necessarily want to change anything to monetary policy until they understand the fiscal policy out of the US. So, and I think a lot of countries are in the same sort of boat here. The problem with that is they do have inflation pressure, so they are going to have to act. Whether they'll act as intervention, I don't know. I think now they're going to start to act in terms of monetary policy, so increasing interest rates, things like that, which I think will have a negative effect on bond yields here. So that to me is bond yields coming down back towards 1%, and that means that we should see some dollar yen downside and in turn some yen strength. So if you go and grab a dollar yen chart and just add it on to compare, wherever it's gone, there it is down there. Let me just pop this on to the right hand side. You can see how correlated the dollar yen price is with Japanese 10-year yields. So you can see here we had a dip in yields, dip in dollar yen, dip in yields, dip in dollar yen. Dip in yields here, large dip in dollar yen. That kind of went a little bit before that, but compounded it a little bit when we had that yen downside. I then removed it, and the market's been kind of going up ever since. So I do feel like the Bank of Japan are in a different cycle to everybody else. They're looking to hike interest rates, whereas everybody's on the sort of the end, either cutting or starting to think about holding a little bit. There are only a couple of markets where I'd say they are really considering, cutting even further. One of those is the Swiss National Bank. So that's why I quite favour this Swissy yen move as well, because Swiss National Bank have been decreasing rates. They want a weaker Swiss franc. So I'm going to try and take advantage of that against stronger currencies. One of those is the yen. Another one of those is Kiwi, but we just haven't seen that Kiwi uplift just yet. But yeah, to answer your question, I do see more upside in Japanese yen. If we go take a look at it against the dollar is still predominantly a stronger currency. If you just look at the right hand side here and you look at the I'll just try and open it up a little bit. Let me see if I can zoom in so you can see that a bit more. When you look at your change table here, it can really give you a good insight about what's a strong, what's a weak currency, especially when it comes to majors. So you want to be looking at this, let me just remove that a second. You want to be looking at this change column here and the percentage change. All right. So what can we see? Well, euro dollar is down 0.13% on the day. So euro is weaker than the dollar. Pound is down 0.34% on the day. So pound is weaker. Aussie down 0.31%. Kiwi down 0.38%. CAD down 0.29%. Dollar yen minus 0.2% to 8%. So actually, the yen is stronger than the US dollar right now. Okay, dollar Swiss is flat. So dollar versus the Swiss franc is flat. Same with dollar against the Chinese yuan. Mexican peso is weaker and Norwegian kroner is weaker. But if you look at Japanese yen, it's the only currency that is stronger than the US dollar right now. So, when you're kind of looking at sort of markets to compare that to, what is the weakest? Well, Kiwi is the one that's doing the worst against the US dollar right now. So Kiwi yen's going to be down the most out of any currency on the day. And you can see that is, that is fact. The market is pushing lower. So for me, Japanese yen is even stronger than the US dollar at the minute, which is a strong currency. So, I think that we could still reach 160. There's a good potential to do so, because if you think about the dollar's point of view, the dollar is still a strong currency. So it'll only take a little bit of yen weakness for dollar yen to trade higher. Do I think yen's going to be stronger than others though? Yes. Like I said, pound I think is a good market to look at. Pound yen I feel really strongly about to the downside, as well as Swiss yen. Those would be my kind of two picks of currency pairs that I would be very much interested in going forward. Hopefully that made sense. Any other kind of ideas, guys, that you want to take a look at? The only other kind of ideas that I have still, just looking from a currency strength meter point of view, like I said before, I've been looking a lot at these kind of a couple of euro pairs, euro CAD in particular. Euro yen's on the radar as well to sell. But just euro has a commitment to trader signal. So, yeah, I'm just trying to not get too involved with euro, but yeah, euro yen and euro CAD look pretty good for some further downside. When I had a little look at euro CAD earlier today, I could see that the market was pushing lower lows, lower highs. We've come back into that kind of resistance, but guess what, we're in the secondary phase here, right? So again, my alert's going off saying, Jono, you're in a secondary phase on a market that is bearish and a market that you want to trade short. That to me could signal further downside. So what do? Go down to my 4-hour chart. What's going on my 4-hour chart? So basically I can see that the market has formed a move higher, move lower, move back higher. So we have a higher low confirmed here. Don't technically have a higher high because when I look back, this is the high, so we don't technically have that yet. So I'm waiting now to see if we get any kind of significant moves. Maybe a break and close below this trend line will trigger a little bit of a sell-off here. I did like the hourly chart, I must admit. I was watching the hourly chart as well, and you can see higher highs and higher lows on the hourly. We've consolidated. We kind of broke this consolidation to the downside, come all the way back into it, and we're just kind of holding there right now. So I didn't like the hourly play setup. Again, we are just very early in the year. Still, it's only the second week. Is it the second week or third week of trading? So pretty much the second week. I like to take it a little bit easier in terms of entries. So I do tend to kind of float up to a higher time frame at the start of a year and towards the end of a year, and in August. So in the kind of year, in the kind of times where you kind of expect some shifts in certain cases, then I do quite like to just kind of take a moment and try and trade a bit of a higher time frame. But everything's still pointed to the downside here for euro CAD. If we look at the Canadian dollar's point of view, CAD is a currency that's been getting stronger. If we go take a look at oil markets, we're starting to break out of key areas as well. We breached $75, we breached 71.50s. The market is just continuing to push higher here in terms of oil, and I think from a correlation point of view, that could be good for Canadian dollars. So I'm very much on the camp of being a buyer of CAD right now. It's again just kind of picking the moments, picking the markets to do that against. If I think that CAD's going to be a strong currency, could I go and pitch it against something like the pound, right? That's a market that I like. When it comes to looking at the conditions of the market, we're just at support, aren't we? So, if I'm looking at that low there, where we found significant buying pressure, we're there. Do I want to sell here? No, because where's my risk to reward on that? Where do I have to put my risk? I have to put my risk above that high. Where's the most common sense place to get out? It's where price is at now. So there's no reward to risk here. It's a bit of one of those where I do think market's going to move lower, but I don't have the reward to risk to play that market. And that's the game for me. It's about finding value, finding opportunities, but then finding places where the opportunity can give me a good risk-reward ratio, right? So talking of that, I quite like stocks. I think the market's looking pretty good in terms of, we've been bullish, we've been bearish over the sort of last month or so. We've had a sort of bearish last month. Are we going to see a continuation now? Potentially. Usually stocks perform pretty good at the start of a year, so I'm happy to look for kind of buying opportunities. Did quite like this breakout of all these kind of highs here. Problem was, again, when I looked at it from a risk reward point of view, I said to myself, okay, well, if I took a position here, where am I going to have to put my stop loss? I'm going to have to put my stop loss either below this low here or below this low here. Okay, so let's say it was below that low, right? And where am I going to target? Well, I'm going to target all-time highs. Okay, that just makes sense to me because that's where the market came in and that's where it rejected last. All right, when I look at that, I've got a 1.17R there. Yeah, that's okay, but is that good enough? So the way I kind of look at this now is I say to myself, right, if the market goes without me, I'm happy to let it go without me because I don't want that kind of stop. If I can try and get it better than that, so, don't get me wrong, I do take 1.1s and 1-to-1s and things like that, but if I think there's more potential, then, I want to try and get as much out of it as I can. So let's say the market kind of rallies into this high here, rejects it, starts coming back down, then I can start looking for that secondary phase turning into a primary phase down at more kind of levels like this. And if I do, then I can try and get my risk reward into a better position, right? So if I try and enter down towards here instead, I've got a 3-to-1 opportunity potentially, and that's going to help me out in the long run, right? Because that means that if I get 3R back, right, I can lose 3 trades and still be at break even, right? So that's what I'm trying to play this situation like here. When I see a market that's kind of run up and I want to buy it, I'm like, okay, fantastic. But then where have I got to put my entry, right? And where's my risk got to be? A safe stop is here. I don't think a safe stop is here. I don't think a safe stop is here. I think a safe stop is there. So if I can try and get an entry closer to that stop loss, it's just going to benefit me if price does turn. So I'm trying to play that a little bit. Hello, Ibrahim. Welcome to the live stream. Hope you are well. So yeah, stock markets I do quite like the look of. Nasdaq is still looking a little bit more on the bearish side. The Dow is starting to look a little bit better. But I think it's just, this is all just interest rate expectations, right? Market is being down because there's predictions of less cuts, but I think inflation data shows a bit of a cooling off. We'll just put the market's mind at ease, and I think that we'll start to see some kind of upward trajectory from that. We've started to break out here. Again, look at the daily chart. Nice big push up, breaking into new highs. That's fine by me. All I want to see now is a few down days, and then I might look to be a buyer of these markets again. So I'm just going to keep those on the watch list for now. The French 40s are doing all right. Nice little breakout there. Just saw that it was up 2% on the day. Stocks 50s also doing well. Euro Stocks 50. Nikkei is just hanging around, not really doing a fat lot at the moment. So yeah, there's not really too much going on in the market right now. If we go take a look at cable, did like an opportunity potentially on cable, but if we look at where prices are at right now, they're still at 1.21 here, sorry. So I had an alert, we broke that out. That to me, from a strategy point of view, is short, okay, with my stop loss above the high. But again, look at this. Where is the sensible target? The sensible target for me is 1.21. Why? Not because it's just the low, right? But it's also these lows, okay, that formed back in 2023 towards October and September. So that makes sense to try and not push price below that. So now look at my risk reward ratio. It's negative. So that to me is a no-go. It's a negative trade. If price had continued to do this instead, let's say the market went like that, up in here, then did that, then yes, I've got a better reward to risk trade. So, you know, I like the idea of pound short, but not against the dollar anymore. Let's see where euro pound went. Euro pound's a market I like as well. But again, this is at resistance. Just a lot of moves that I've been looking at recently have just kind of broke out, gone to where they were going, and just not really looking back. The only ones, like I said, that I like, that I'm in right now is Swiss yen, and I was in a Bitcoin long that closed out. So those are the only markets I've really been too interested in. Dollar Swiss, again, you know, I like dollar Swiss to the upside, but we've come into the 0.9150 area, which is a strong level on the weekly chart. Do I want to mess with that? Not particularly, but I do feel like this is a market that could continue higher. I like the fact that the Swiss franc's a weaker currency. Like I've said before, I'm trying to take advantage of that against the Japanese yen. So don't really need to get back involved here. My last long was here. And then NFP kind of push prices into those levels there. So yeah, other than that, there's not been too much going on. Let me know what you guys have been up to this week, what kind of markets that you've traded. What's your best trade of the week? You know, let me know that. I'd like to know your best trade of the week, just to see if there's any markets that I might not have thought about that you guys are kind of trading. You know, I wonder how many of you guys are. Do you guys mainly trade FX, or is it commodities? Is it stock indices? Let me know. So yeah, that's kind of all the kind of important points. We do have some more important data coming up. You know, if we look towards tomorrow, we have pound retail sales. I think the pound is probably a market that is, you know, continuing to be under pressure, lack of growth, lack of fiscal stimulus. You know, if you think about it, stimulus from a government side is two ways they can do it. They can either reduce taxes or increase government spending, whereas the UK government right now are increasing taxes and reducing government spending. So that's not necessarily stimulating to an economy. It's more of a sort of contraction style. So EuroCAD shorts, yeah, I like that, Ibrahim. I'm kind of eyeing one up of those myself. Just waiting to see if price will break this zone in there. So yeah, quite like that one. So far it's euro yen. It retested the daily trend line and reversed, and I got in. Yeah, man, I like that. You know, I do like euro yen to the downside. I think that's a good market as well. Euro for me is just a bit of a funny one. Just a bit of a funny one. The only reason that puts me off euro yen right now, or euro in general, is just this COT report. Now, like I've said in the past, COTs are horrendous at timing things. Okay, they are horrendous at timing things. But when I look at the net positioning, you know, I can see that the net positioning is at a decent high. Not quite at the highest levels they've ever been, you know, which was 2020. I think it's been higher than that as well in the past. We go and have a little look back. Okay, the highest level they've been in history is 2015. And I mean, look at the move. Didn't really do that much. But you know, what it tries to signal to me is the fact that they are, you know, buying, or the commercials are buying at levels that are aggressive compared to, you know, the last time that we had an aggressive move, which was, you know, down in 2022. So I'm just trying to think, to me, that is this the time to be continuing to sell euro dollars? I just don't know. I don't know. It's kind of putting me off. You know, if you look at a hedge fund point of view as well, they're selling at levels we haven't seen since 2020. So yeah, I'm just a little bit cautious on the euro front because of that. So I'd say the commitment of trade reports is kind of keeping me out of those euro shorts right now. Ratish gold long, love it. Pound yen short were my best trades. Got out of gold at 2693 though. You say that Ratish like it's a bad thing, so is it a bad thing? That to me looks like the previous swing highs, right? 2693. So just below these highs. I don't think that's a bad out. I don't think that's a bad out. Depends where you got in, obviously, but other than that, previous highs. I mean, look what happened when price got to that area. You know, you actually saw some quite aggressive selling coming in. So that would have spooked you a little bit, I imagine. You know, seeing that aggressive selling coming in. Prices obviously eventually continued to push higher, but at the time you may not have thought that if that little pushback there. So I don't think that's a bad out at all. You know, especially if you kind of look at it from the sellers came in. I don't think that's a bad out. In at 2663. 2663. Yeah, that is not a bad out at all. That's almost like this double bottom retest in here, and you've come out at swing highs there. That is not bad. You've almost called the turning point, I guess, you know, at that point. So I don't think that's a bad move. I think that's a bad move. 𝖢𝖥𝖣yithere didn't pay attention. You know, that's okay. That's okay. You're in pound yen short, which is doing really well as well. So take the wins as they come. Take the wins as they come. You know, this is looking quite nice. You know, I think for me, this is a market I'd continue to watch as well. We're coming back into a bit of a support zone, just back in here, right? I expect some kind of buying or some kind of take profits from sellers up here at this point. If we get a short-term bounce, then it could continue down to 186. 186 is the market, the target that I like on here. Okay, we can have a little look at how the Forex strength meter performed this week. If we go take a look at sort of markets, you know, euro dollar trades, I think I'm just going to ignore because I don't think there's too much value in those in terms of risk reward ratio. Aussie yen was a sell this week. I don't know how Aussie yen has performed this week so far. It's down on the week. Would it have given us an entry? Probably up at these highs here. Probably that candle would have been our trigger point. That was at 2 AM though on Wednesday. But you had all day of Wednesday to try and get on the back of that move there. Let's have a look at the hourly change trend up here. Yeah, this kind of bullish little move there. Little high, little low. Consolidation. Market broke out of that consolidation. So yeah, that's been a nice move. So Aussie yen would have performed pretty well for the week. What else did we have? CAD Swiss buy. That's not a market I've actually been keeping too much of an eye on because I think it's just gone straight up. Don't think it's given me a pullback yet. Okay, yeah. So look, CAD Swiss in that sort of secondary phase now. Starting to see that kind of little bearish trend appear on the 4-hour chart. Bearish trend appear on the hourly chart. So if this one's going to continue higher, we need to see a bit of a move. We are at weekly resistance though, so that's probably why I've ignored that one. Euro Oz, Euro Kiwi I did like, but I stayed away from. Euro Pound I've stayed away from. Euro Yen, Euro CAD we've kind of had a little look at. Pound Aussie, Pound Kiwi, I don't think those markets have done too much. Oh, I'll tell a lie. They have done a lot, but there's been no pullback. So Pound Aussie, Pound Kiwi was on the radar to short, but there's been zero pullback there. I'm going to watch this little pullback on Pound Kiwi. You know, that looks very shallow in depth there. That doesn't look too healthy if you were a buyer of this market. So I like the targets down towards 216s here on Pound Kiwi. So I'll be keeping an eye on this one on the daily close this evening. See how that kind of shapes up and see if I can get some kind of, you know, breakout opportunity on this. I can see we're kind of creating a little bit of like a, you know, sort of pattern, I guess, here. So, you know, if we can break that to the downside, that might be good for a little bit more of a play. again, we'll have to kind of think about risk reward at that point, because if my target is going to be around maybe this 216, we flirt, well, depends where how high this market goes. I can't really, we're flirting with a bit of negative R there, so I'll have to just keep an eye on that one in general. But look at that consolidation. That consolidation there, that's volume. That is volume. Buyers bought that market. We've seen that step out. This could be a target for sellers going back and retesting that volume zone. So pound Kiwi I like a lot. I'll keep an eye on this one. So yeah. And then we had, what else did we have? Pound yen we've already looked at, pound CAD we've already looked at, and Swiss yen. So yeah, markets, the currency strength for me this week, I would say, has performed pretty well. Yeah, it should be ratish, absolutely it should be. What was your trade this week? So I've had Swiss yen short. This is my trade this week. Looking to see if the market will push back down into this 170 spot. 10 is my full TP. I also went Bitcoin long because I missed the S&P 500 move. There's Bitcoin. I basically bought Bitcoin off of this breakout in here, so it broke back above the 50, kind of retested, so I ended up buying around this level, targeted up at 100k. Don't really want to trade Bitcoin past 100k just because it's such a psychological level, but I will buy it to it. And if you look at the daily chart, you can see that there's a nice support zone here, right? Support. So yeah, I felt that if we broke this kind of 4-hour downward trend, that the market would spike back to the upside, and that did do that. So yeah, that was my Bitcoin move, and still in Swiss yen short right now. Also looking at Ethereum and CAD Swiss longs. Ethereum's an interesting one. I've actually just done some analysis on Ethereum because second largest cryptocurrency. I don't know if everybody follows cryptos that closely. I don't follow them aggressively, but I will. If it's an index that can be traded, then I think it's an interesting market. Look, I've got certain feelings about cryptocurrency in general, but I think if the market is interested by it, then it can provide opportunity at the end of the day. Look, Ethereum is is an interesting one to me because it hasn't really had that sort of sterling performance. All the other cryptos are kind of hit new all-time highs and things like that. Ethereum hasn't, so I quite like the fact that is this market undervalued compared to the others. I don't know why Ethereum is necessarily lower than all the others. I just don't. But we had this consolidation down in here that finally broke out, and that was President Trump's win in the election, and it rallied up to the previous highs that were formed back in March. We rejected those highs, and now we're down lower. Again, we tried to make new lows. It failed to do so. So I actually quite like Ethereum as well. I think this is a market that I feel like is a little bit undervalued. When you go check out sort of the likes of Ripple has just broken into new highs, right? If I look at the monthly chart on Ripple, previous highs in January 2018 have now been broken. So, and it's done sort of, what has it done this week? It's had a ridiculous rise this week. It's up 45%. So, in terms of cryptocurrencies, Ripple is just raging on, which is quite interesting because down here, it was stuck down here for a very long time. And the reason being is because they had actually had an SEC filing against them for fraud. And then I'm pretty sure they lost a certain appeal but won another, because you can actually see the November candlestick. Let's have a look at the 6th of November candlestick. Compared to everything else, it's like a dot. It doesn't do anything. But then I think they won their appeal or something in the SEC kind of court filings, and Ripple has just taken off to the upside since then. So yeah, very interesting market at the moment. But if I kind of come back to Ethereum a little bit, it hasn't really done the same moves as what everyone else has done, which I find quite interesting. So I agree there, right, guy. Ethereum's an interesting one to look at. You're waiting for a break of a 4-hour trend line. Yeah, I can kind of see that sort of in and around this area maybe. So yeah, very, very interesting market, I feel, Ethereum. So I have done some analysis on that should be going out over the weekend on that. CAD Swiss as well, yeah, that's also on my radar. So yeah, it seems like we're all on the same page. We're all following the currency strength and weakness, which is nice. I'm glad that a lot of you see a lot of value in it. You know, that makes me happy. So yeah. Right, guys, we've been going for about 50 minutes. I don't think there's much more to kind of discuss in terms of what's coming up for the rest of the week. All I would say is you've got pound retail sales coming up. So rat issue in pound yen short, you might see a little volatility there at 7 a.m. Hopefully it goes in your favor. Hopefully the market continues to drive down lower. And if it doesn't, don't panic. So yeah, I think I'm going to leave it there, guys. Thank you for everyone that joined. I appreciate you all as always. Thank you for all your comments and questions. Right, guy, currency strength has really helped my trading. I'm really glad. Really glad that has helped. So yeah, I really appreciate that comment. Thank you, right, guy. So yeah, let's all have a good weekend. I will all chat to you next Tuesday, hopefully, and yeah, I will speak to you then. Let's see what the currency strength meter says over the weekend, see what opportunities for us for next week. Can't see too many changes right now. If anything, I think yen probably has got a little bit stronger. So that will probably be the biggest change on the currency strength meter going forward. But as always, I'll let you know, and we'll pick out some other currencies to trade next week. So thanks for watching, guys. Appreciate you all. Have a great weekend, and I'll speak to you soon.